everyone, this is Lloyd speaking. So today we have Alexis and me. Alexis was providing the fundamental updates, and I'll be providing the technical from myself point of view. So without further ado, I'll put Alexis in. Today she's only on a video format. Yep. So Alexis, oh no, sorry, Sam. Let's play her video.
Hi and good afternoon. Welcome to Sunday Trader Talk Radio. This is Alexis over here, and I am going to have a sneak peek at what I will be looking at for the next couple of weeks. Now, I am looking at Swiss dollar over here as a COT summary. Now, this website is cmbgroup.com. They have a very nice chart looking like thing. So I am kind of looking at being a little bit bullish on the Swiss in the probably last month of the trading year of 2023. And maybe because the franc still has a safe haven status. All right, now, this reputation of a safe haven has been acquired over decades, and the investors' desire for this currency stability is normally expressed in their foreign exchange investments of the Swiss National Bank. Now, through the first quarter of last year, the Swiss National Bank actually acquired foreign currencies worth over 900 billion francs to alleviate appreciation pressure on the domestic currency. However, since then, interest rates across the board have risen faster than in Switzerland, and the Swiss National Bank has been able to reduce its foreign currency holdings by more than 100 billion francs. All right. And what we are looking at is, as long as we are having a little bit of turmoil in the world, a little bit of uncertainty due to, the conflicts that's going on, there will be a slight desire for a stable currency, and the Swiss is still my pick as a safe haven currency. Now, if we look at the Swiss statistics over here, you can actually see that over here, you can actually see that it has really low interest rate 1.75, very low inflation 1.7, decent unemployment numbers at 2.00. And now what concerns me for the Swiss is that it is quarterly GDP figures are kind of flat. All right, over here it says that the Swiss GDP has stopped from the previous quarter in the 3 months leading to the June of 2023. And missed estimates of a 0.1% expansion and holding the 0.3% increase from the quarter ending March. So this is pointing to a renewed period with good growth for the Swiss economy, and is suggesting that the Swiss National Bank's historical tightening campaign is transmitted to a greater extent halfway through the year. Now, this website is tradingeconomics.com, and it's just giving a narrative of where the quarterly GDP figures are for the Swiss. Now, being a safe haven currency, being a kind of more stable currency, I would like to kind of be still on slightly bullish on the Swiss, bearing in mind, again, we are entering into the last month of the trading year, which would give us slightly less volume and liquidity in the markets. So let's explore the couple of Swiss currencies that we are kind of looking at. Now, Aussie Swiss, not quite looking at Aussie Swiss right now, because the Aussie is doing pretty well fundamentally, and it has a bit more potential for upside. Therefore the purpose of kind of trading fundamental analysis is to take a weaker currency and pit it against a stronger currency, right? So I'm trying to look at weakest versus the strongest, the first and the last. And Australia is doing pretty okay on the chart, so I'm not going to look at Aussie. All right. CAD Swiss. Now, CAD Swiss is a bit more interesting. To look at CAD Swiss, we have to look at oil. So over here, oil prices, you can see it has been on downward trajectory since September. And this is actually more or less in line with the seasonal shorts of the year. All right. So seasonally, in the last quarter of the year, there is a weakness in oil. And this has kind of continued playing out. But of course, coming, I think, end of December, somewhere in mid-December, end of December to beginning of January, we should have oil starting to become bullish again based on the seasonal charts. And that is where we should be a little bit careful of shorting oil at this point. So if oil still continues moving towards the downward, still has a downward trend, then I think we do have a little bit more room to play for the CAD Swiss. Now, my only concern for the CAD Swiss is that it is really, really overextended. You can see it has broken previous lows of almost all time. All right. So what that means to me as a trader is that there's not much space going downwards. But if it appears on a trend trading strategy towards the downside, I am just going to take it, but of course at a smaller risk. All right. Now looking at Swiss yen, We have been riding the Swiss yen longs, for quite some time right now. Do I think there's more upward trajectory? While I wasn't sure in the last couple of weeks, prices has continued to surprise me and has broken above its highs. So once again, I'm not sure where it's going to go. There is a high level over here, a recent high. Now, if price continues towards the upside, breaking above this high, then potentially there might be still a tiny bit more room on the upside. Again, I'm very, very aware, very mindful that we are very, very overstandard on the Swiss yen. Now we are entering into the last month of 2023 again, and in 2024, there is speculation that the Bank of Japan might start to increase interest rates. Now it's a big question mark so far because news coming out from the Bank of Japan is still saying that they are going to wait and see. All right. So a lot of false starts have been happening. People are trying to buy the yen based on what they think is, the Bank of Japan's intolerance of where the yen levels are. So Swiss yen, well, there's small room topside. I don't think it should warrant much risk to be played on it. All right. So maybe small risk just to see whether it could hit towards the top. Swiss yen traders should do a little bit better on the smaller, shorter time frames. Now, if we look at Euro Swiss, again, euro is doing pretty well on this statistically. It has found strength across quite a number of currencies. So Euro Swiss is not the currency I want to look at. Same thing for pound Swiss. Again, if pound Swiss can stay above this resistance level, then I think there is potential to short it. But again, not very much. Very simply, it's because I think if you look at pounds inflation figures from the last reading, it has improved by almost a whopping 2%. All right, so this tells us that maybe the pound's weakness is going to has more or less stabilized, and we should find a little bit of pound strength coming back in. So pound Swiss not a fan. Kiwi Swiss, however, now Kiwi Swiss is something a little bit more interesting for me. If we look at the Kiwi figures over here, if you look at the Kiwi figures over here, it's got 5.5% interest rate, which is exactly the same as the US, but inflation is 5.6%, almost a 2+% higher than comparatively to the US dollar. 3.9% unemployment. And what is interesting for me is the unemployment rate has been tracking towards the upside. All right, so it's kind of worsening in that sense. Now, currently, the GDP figures is 0.9. What I am looking at is, since GDP is a slightly lagging indicator, if GDP falls off in the next reading, I think it should confirm our soft bias for a Kiwi. So I am slightly more bearish on the Kiwi. Again, very mindful that it's all very near the trading bottom. So if you look at the weekly time frame, you can see this is a weekly time frame. You can see that the Kiwi is trading at an all-time low compared to the Swiss. So I don't know how much more place it has to go downwards. The only place I can see is the previous lows at this 0.52 level. Of course, I would like to see whether we can take it towards there. And if price continues to find resistance at this level over here, let me just put a line across. Okay, if price continues to find resistance at this level, then possible target at 0.53, very, very thin, small trading target, and maybe 0.52. So not much room to go downwards, but definitely not a currency I want to go long anyway. So my bet for the Kiwi Swiss is to the short side. Now, based on the commitment of traders, can see a little bit more Swiss longs being held. This brings me to dollar Swiss. Very nice downward pressure to the downside. We might face a little bit of a retracement, but what I am keen is to see whether we can kind of fill up this level over here. All right. Now there is expectation that the Fed will be decreasing its interest rates in 2024, and this has caused the dollar to weaken quite a little bit. I don't know how long this weakness of the dollar should go. We are looking really, all eyes out on the Fed right now. But for dollar Swiss, at least we still have a little bit of propensity to the downside. Again, that's all I have for this week. But one gentle reminder is we are entering the final month of the trading year. So do trade safe and take a holiday if you guys can get one. So cheers everyone and take care. That's all for me. Bye.
All right, thank you, Alexis, for her fundamental updates. And with that, I will jump over to my technical update. Now, I'm having a bit of I think I'm almost having a complete opposite view of Alexis. So let's, without further ado, jump into it. Now, the first off my list, actually for this week, no, actually for now to end of year, my trading setup since at least for now, seems very clear cut to me as to why I should trade. So right off my bat, the first one would be the Canadian index. Now, why do I say until the end of this, until next month? Is because remember, I do my analysis on a weekly time frame. On a weekly time frame, things don't change on a week-to-week basis. Yeah, on a month-to-month basis, yes, but not on a week-to-week basis. Yeah, of course, from a weekly, I jump down to 4 hour. For those who are new, this is how I do it. Now, off my bat, again, ranking the strongest to the weakest, my opinion, and through tanker analysis, is that I think the Canadian index has really, really huge upside uh, for us to go. You can see that the Canadian index has been on a range since last year, November 22. Right, so recently it has bounced off and seems to have taken off. Yeah, as such, I think we have plenty of opportunities, especially for trend traders, be it on the D1 or the H4. Yeah, it seems to be at the start of a trend current, if it does take off. Yeah, so just go for a usual setup, but I am definitely bullish about the Canadian index. Now, the next two, which is the best buddy, will be the Aussie and Kiwi. Now, this two has always been the commodity indexed, commodity currency. They usually go hand in hand. Now, on a long-term basis, no doubt they are actually weakening, but currently it seems that it is about to strengthen. It has broke through a key level for me. It's actually $60. You can see that price has been below it, dancing about for a pretty long time. Now, just last week, it has decided to break above bullishly. Pretty bullish, in fact, a very, very bullish closed. Might expect some minor retracement, and then I would totally expect price to actually go all the way at least up to the $63 level. That means, again, for D1 and H4, we have plenty of trend trading opportunities. Don't be in a rush to jump in. Wait for your retracement. For those who are new, for those who are experienced, I think we are well versed to actually trade any breakout move. Again, to the upside. Don't be mistaken. Like I mentioned, Kiwi and Aussie always best buddy. Kiwi broken to the upside. This is really a fat level. Why did I draw that? Yeah, but anyway, consequently, it's actually the same thing. Yeah, so you can see that price. In fact, they actually have a bit of a gap. Retested, and then it has a very, very bullish closed. Where it will go, I don't have a magic ball. But safe to say, I would expect to go up to the 68. That means from price where it is now, 65 to 68, it has a lot of ample space to travel upwards. Yeah, so again, for such setup, just bear in mind that there is a bullish tendency, but don't be in a rush to go in. Just wait for a usual setup to jump in. Now, those are my top 3 currencies to trade long. Now, in the middle part, which is I'm not so sure. Why I'm not so sure is because usually price are in the middle of nowhere or it's trading straight into a level, as can be seen in the British pound. Yeah. So to me, you can see that. To me, I would say that price is actually trading straight into a level. Now, this is by all means, this is not a very strong level. Yeah, it seems that price just reversed in the past. So I mark it up here. The moment it actually sort of giving on a H4 time frame, if it gives me a lower high, a higher low, sorry, a higher low, I'll still be trading upwards to the 130 level. Yeah, it's just that comparatively to the top 3, I would probably be more mindful of the middle part setups. That means the pound, the euro, the Swiss, which is in the middle. Right. So either I wait for a very strong setup or I reduce my risk. Again, why? Because this is very clear cut, trading straight into a horizontal level. Now let's have a look at the euro. Same story as the British pound. Again, euro and pound usually they are correlated, but for euro, I'm ranking it even lower because it is actually trading straight into a very, very strong 110 level. You can see that price 1, 2, false break, come back down, and then now it's going for, I think, at least for this year, it is going for a 4th try. How will it perform at here? I don't know, but this is not a place whereby I want to be parking in new positions. I'd rather not be trading euro at all. Swiss. I vaguely remember the last session we had. I did say that price will actually break and then we'll get whacked down again. Very strong whack down. Again, price is coming back to test the 113 level. You can see that price is pretty stubborn. Like Alexis said, Swiss is on a bull run. But to me, this is a very strong level whereby I do not want to be near it. Even when I'm trading H4, very little opportunity for me to actually go for a 3:1 or 4:1 kind of move. H1 traders maybe, but for me as a swing trader, I don't really like trading into such strong levels. Definitely staying out unless there's no unless for me for this time round. Now, Japanese yen, for those who are going to Japan for holiday, congratulations. I think yen is at a really, really low level. On the weekly time frame, just bear in mind that I am still on a weekly time frame. Is this? You can see that yen is on a the bearish bar is closing at a 50% level. It does not really indicate where it wants to go. So it seems, I mean, we can't ignore that it's on a downtrend, right? So this is definitely on a downtrend, but at the same time, it's rather close to a double bottom. You can see that price actually rejected this area twice. Yeah, I don't think it will rise anytime soon until next year. Seems to be fundamental news backing it. But for time being, I still expect to either range at this level or simply just break down a bit furthermore. Yeah, so I would say yen is weak, but I would say cut your risk at trading yen. Now the weakest of all currencies for me at the moment will actually be the dollar indexed. Again, you can see that price break above the 106 level, dance a bit, break down, retest, and just have a complete breakdown. Again, this will actually be a fundamental news. I would say that they announced they won't be raising interest rates, so it's no surprise that people will be selling the dollar. Yeah. So pairing all this, I will actually be trading the CAD, Kiwi, and Aussie long this trade against the dollar, and probably half my risk against the yen. That's the setup that I'll be going. So let's see what I have. Where is my dollar cats? Let me jump. Yep. So dollar cat setup, very straightforward for me. You can see that in fact price has already broken through a very nice level. On Friday last buy, it actually retested. Yeah. So on Monday morning, I deemed that I already have a trading opportunity. Yeah, all I need is actually another test bar or an engulfing body that I'll be happy to jump in. Again, for those of you who are willing to wait, the next level at about 1.356, this will be a really, really strong level for price to actually have a break and retest for it to jump short. Yeah. All in all, a very, very good short opportunity for dollar cat. Again, Aussie dollar, let's have a look at it. Aussie dollar, you can see that on a H4 time frame. For those who are new, I'm on a H4 time frame. I did say that I'm going to long Aussie and short dollar. That means Aussie dollar long. Simply saying once price breaks this level, a break and retest will be a very, very nice setup to go for a long setup. Right, you can see very clearly that price have dipped. Otherwise, have a look at Aussie yen. Yeah, Aussie dollar, Aussie yen, very, very similar outlook. You can see that both of this pair, the price reaches a similarly forming a double top. I'm on a long sentiment for these two currency, so a break and retest is warranted. Or sometimes it might not be a retest, it can be simply a higher low. Jump in. And pretty similar outlook for Kiwi yens. Either wait for price to actually go down again, or simply wait for break and retest. Now, all these setups that I'm displaying to you is because I already have a long bias. I'm just waiting for the setup to happen. Yeah, I'm not so really worried about the setup. As long as it gives me a good excuse to go in, a higher low, I'll be happy to jump in. Now, bonus setup is actually the gold. Yeah, so I'm sure you have heard Inslee saying that gold has a seasonal tendency to go long towards the end of the year. I'm waiting for gold to perform its magic. This level, it has refused to break about 1, 2, 3, 4 times in the past. Again, I'm waiting for it to break, giving me a higher low, a break and retest. I'll be happy to actually jump in. Yeah. So these are the few currencies which I'm looking for to trade. Again, echoing Alexis' sentiments that year-end trading volume is low. So pay attention to the spreads that you're paying, especially for daily traders. I've noticed that for the past 2 weeks where I'm trading the daily time frame, sometimes spreads can be as high as about 15 pips when I'm placing a trade 7 a.m. in the morning. Yeah, you might not want to actually trade during those early hours. Yeah, wait for the market to settle down a bit. Yeah, but otherwise, low trading volume means that spreads are pretty huge. Right, just pay attention to that. So with that, thank you for joining us this evening and see you around. Goodbye.